Welcome back to the show, everybody. Check out these headlines. CZ Binance in the news. We got pension funds on crypto. Kevin O'Leary on the Tornado Cash. You're going to want this. What's Wells Fargo, Goldman Sachs, HSBC all have in common? I guarantee you're going to love it. And we got to talk about this because it's a big deal, ladies and gentlemen. It's the Ripple Flywheel effect, and it may be about to go into action. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow us on TikTok, YouTube, Twitter, and Facebook at the top of the screen for exclusive content. Right now, Bitcoin's 24,100 plus. Ethereum just under $2,000 at $1,900 and change. We see XRP holding its own, slip down to the number 8 spot through the weekend here, 37 cents. Let's get into this because Linqto has acquired Trustline. That's right. Trustline. Matthew Rosendine, I believe it is, formerly of Ripple. And now this strategic move will accelerate Linqto's mission of making private investing simple while trailblazing a path for private equity securities on the blockchain, ladies and gentlemen. They have made no bones about it. They are creating an app that you will be able to have a secondary market to trade your private equity shares on that app. That is groundbreaking. No doubt about it. And I don't think you can find another private equity company that has better minimums when it comes to participating as an accredited investor. Click the link below the video, linqto.com for more. Don't mess around. Incredible products. This right here from Binance, CZ, shout out to you, my friend. He says, Binance is the most licensed crypto exchange globally. I'm a fan of CZ Binance, no doubt about that. It's great that Binance is the most licensed crypto exchange, but is Binance the most regulated? I've learned in this space, license doesn't necessarily mean regulated. Again, I'm a fan, not being combative, CZ. You know, I'm reminded of this right here from Caitlin Long back in the day here when Celsius took its plunge. It said markets are about to learn that being licensed doesn't mean intermediary is regulated. Registration with FinCEN, as Celsius was shown here, does not mean intermediary is regulated. I tell you, these things are very, very important delineations to pay attention to as we move forward. And I want CZ to succeed just as he has done. I am a fan of what he's done. It was the first exchange I ever got on, and then I had to get off of there as a U.S. resident, but which had always broke my heart that I had to hop off of there. But nevertheless, Michael Branch, Hall of Famer, give him a follow, says, despite losses from the bear market, pension funds across North America remain bullish on crypto, according to Wall Street. Now, this goes to one of the creeds of investing that I have. Not financial advice. I'm just sharing my digital perspective, which is this. I have been stacking my pennies next to the richest people and entities, institutions' dollars, and pension funds are one of them. And they're not bothered at all by this bear market. In fact, I bet you they're probably taking deeper positions knowing it's going to come back. Look, I'm excited about this because, you know, with this watershed moment with crypto that we're in, I am so excited about what's going on here. The idea that someday down the road, I may participate in staking some of my assets in crypto for returns. I couldn't be more excited about that. And Kava is preparing for that more and more every day. Kava liquid staking coming September 8th with Kava 11. Make sure you give them a like and follow. You're not going to want to miss what they've been doing. They are the biggest and most successful blockchain in the Cosmos ecosystem. And that's quite a statement with over 320 million locked up in total value smart contracts. Now, this is here is Kevin O'Leary, billionaire, says arresting the creator of Tornado Cash is okay with him because he's messing with the primal forces of regulation. Let me decipher a little bit of this here if I could. Now, I'm certainly not speaking for Kevin, but what I want to say is that he's making a point that we should be note of, okay? At the end of the day, he says it's okay to arrest that guy. Why? He's messing with the primal forces of regulation. If we have to sacrifice him, that's okay, because we want to have some stability in that institutional capital. He further suggested that the cryptoverse should emerge as a rule-based environment. Only then will it lure in more institutional capital. Look, I've said this a long time ago. It was even in an interview a couple years ago with someone back in 2019 timeframe on the show. But I asked a DeFi developer, I was like, are you building your platform with regulations built into it? And the answer was no. And where I think we're getting to the point with governments, and believe me, the libertarian in me does not care for it. But where it appears to me that we're arriving to this place is that we know that we use the internet every day, right? Okay. We also know that there's a dark web out here that people use that you don't need to be on because that's where bad stuff happens, right? Okay. Well, it seems to me what we're seeing here, because I believe this guy was wrongfully arrested for creating an open, permissionless, decentralized protocol. But I also, at the same time, believe that's exactly why he was arrested. We're coming to a point where it seems that governments and regulators are really making the point that a real decentralized platform is looked at as the dark web and illegal activity only. And that decentralized platforms is really just a phrase, right? Because really the truth is that real decentralized platforms that are going to be regulated, approved, and allowed to be used in a regulated fashion really won't be decentralized at all. Now, will they? Judge Netburn taking the note that the SEC just wasted her time and thousands of dollars by not simply agreeing to the subpoenas in the first place. Shout out to Jeremy Hogan for this one. We reported this morning, motion granted for Ripple for the 2 subpoenas necessary to authenticate videos of 7 SEC officials and their public remarks. And the judge ignored the claims of the SEC, saying that the defendants, Ripple, were trying to reopen fact discovery, which was not true at all. They just keep pissing off the judge, and I'm sure that ain't going to be good for them in the long run. But what does Wells Fargo, what does Goldman Sachs, what does HSBC all have in common? They agree XRP is a currency. And you see that here. Brand new Wells Fargo report classified XRP as a currency. We covered it. Goldman Sachs now also classified XRP as a currency. We covered that. And then we got this, HSBC, Goldman Sachs, Wells Fargo, HSBC, all classify XRP as a currency, no matter what the XRP or SEC and Gary Gensler say, will not make any difference to the banks. They're going ahead with ODL regardless. And I think this really sets up kind of the second half of this case. The SEC versus Ripple, absolutely, I agree with John Deaton in the writ of mandamus when he submitted it. That case was weaponized against Ripple and XRP, and I believe, in my personal opinion, it was because of the knowledge that was held by people like William Hinman and Jay Clayton, who understood that Ripple and XRP, in fact, were the chosen ones. And in order to get that first mover advantage, I personally believe, it appears that they used their advantage in a government public held position to advance for private gain Ethereum, the EEA, and Consensus in their own wallets. That's what I believe happened. And at the end of the day here, it brings us to where we are in this moment with Ripple. We know that for a fact, Ripple, the company, hasn't conducted any programmatic sales since the fourth quarter of 2019. Stay with me through this, please. I'm asking you. That means Ripple has not sold to a non-on-demand liquidity partner since quarter 4 of 2019. Don't believe it. It's their words, and it's still true. I give you this because I get attacked about this all the time, and let me tell you, it doesn't bother me because this is the truth right here. There will be others whose spite for me rivals their own intelligence to want to cancel me. Ripple's very own words as well. Ripple has been buying back XRP to redirect sales to on-demand liquidity partners. Why would they go through the effort only to watch on-demand liquidity sell back to retail exchanges if they're buying it off the market in the first place? Because it's not intended, I don't believe, this information shows us, because Ripple's been a buyer of XRP in the secondary market, expects to continue to undertake the purchases at future market prices as ODL continues to gain global momentum. And it says and confirms right here, the XRP repurchase program is intended to be sold to on-demand liquidity firms, meaning once they buy it, it's not coming back on the exchanges. Come on in. And there it is right there from News Crypto, and it was really in the Q2 2022 report. And you can see right down here, we talk about the fact that they understand in the actual Ripple report, I'm going to bring it down to you, Ripple has continued to engage in sales solely related to on-demand liquidity, and these volumes have ramped up substantially as Ripple on-demand business expanded globally, and we know it has very much expanded. And Ripple has been a buyer in the secondary market, continues to undertake the purchases for future market prices as ODL continues to gain global momentum. This is the reality, and I believe this reality is going to create this diagram that I put together for us here. I have talked about the flywheel effect a couple years ago and thought, you know, this moment that we're in really takes me to this place again. And this isn't just my idea of the flywheel effect. Now, before we break this down, let me clearly do this. Confirmed, pre-allocation. It's confirmed. It is not a question. They do it, and there's no harm in them doing it. The problem is Gary Gensler believes that that makes XRP a security just because you simply had an option contract with somebody. The guy's out of control. Ripple XRP flywheel effect, confirmed. This isn't an if, ladies and gentlemen, it's a when. And if we look, this is from a 2019 report that really set me in motion at that time, back in 2019, to first cover what was the flywheel set in motion. And you can see here is actually the flywheel they talk about. Value and feasibility, proving value, proving feasibility, scalability, moving to production, building trust and demand, which they have clearly done. Flywheel effect, expediting move to go live, which they are live. They have 25 corridors, boosting with digital assets. And we know that that's what they're doing. You can issue stable coins off of there. You can issue CBDCs on the private ledger, right? So then we come back to the diagram itself that I have for us, which is this. We clearly understand that if a customer wants to go to Bank A and they want to take the payment of $10,000 as an example and pay from Bank A and use the XRP to a market maker, on-demand liquidity partner, and exchange and sell that to Mexican peso to Bank B to pay the customer to receive the $10,000 payment, which happens in about 3 to 4 seconds. Why does this matter? It matters because it reveals to me that's the end goal, what the real use is here, okay? Or bank to bank and then not even a customer coming in, right? But if we look at this and we understand Ripple buyback from Q2 2022, you see the non-ODL retail exchanges, Ripple is buying back out of that bucket and pouring it in and redirecting it. This is not an opinion. This is the way they're doing it. They said they're doing it. They're redirecting the XRP they buy back off of the exchanges you and I get XRP from. And if you're in the United States, you can't get it the way we used to get it. And now it's being redirected into on-demand liquidity partners where the real volume is going to come from. The real liquidity, the real utility is going to come from to ultimately drive price. Let us not forget, Ripple stopped selling retail Q4 2019. That's done for. Jed McCaleb sold 9 billion XRP and they're gone. That's done for. So where is retail going to get it from? If you believe in this moment that Ripple goes through the hassle of buying it back off the exchanges to redirect it to on-demand liquidity partners so on-demand liquidity can sell it back to retail? Oh, I don't think so. What would be the point of Ripple buying it back be if that were the case? Come on in. The flywheel effect is what this does. Getting it back off the exchanges that are non-ODL partners because they realize the value of this asset. That's why. And I feel for me, I just need to hold it until the flywheel effect is well underway and the lease and the payments program versus the buyback continues to drive price with demand. Where's the demand really going to come from when this thing ramps up and we get beyond remittance companies and into the banks once we have clarity? Well, I think it comes from here, knowing that the banks have Nostro-Vostro accounts, traditional payment rails, and understanding the idea is to get them to unlock the Nostro money, to the tune of $20 to $25 trillion around here locked up in dormant capital. So that money can be released back to the banks. They can keep some of that to build new products, some of them digital products, some of it to just make their bank better, their business better. To come back from the damage that's been done, from the liquidity crisis we're in, and get access to that capital for the first time in the history of cross-border payments. And the idea is to take a portion of that Nostro money and put it over here in the XRP bucket, because we know that you're building the new payment rails, the new bridge path to eliminate pre-funding for all of these financial institutions and banks, so they can continue to make these payments in a much larger way and not in small value payments as we're doing now, which really suggests to me that the real price driver is in fact XRP and on-demand liquidity, not the retail investor. That's where I'm at right now on this day. And it makes me want to hear this all over again from Naveen Gupta. If you were to come back, it's June 2022. And if you were to come back at the end of the year, Naveen, what would you be able to tell us? And he says we're going to see step change on the network, explosion of nodes, a critical mass, creating escape velocity. In other words, known as the flywheel effect, baby.
Last question is, I guess it's June 2022. If we speak again, let's say at the end of the calendar year or the early next year, what will have changed for you?
So for us, the scale would have continued, right? So in terms of things that we talked about, 8x growth, 15 billion, you would see a much bigger number at the end of the year because we are growing very, very fast. You would find a lot more nodes on the network. And what I want to say is normally though the growth on the nodes on the network may be incremental, but their effect is step change, because after a while you achieve critical mass or escape velocity, and then it essentially moves together very, very quickly, right? So both are these two things that I'm very excited about. And then when we should be able to talk, I should be able to cite examples and take you through how that journey has been.
Okay, so
there you have it right there. Look, thank you to all of you that took the time to listen today. You know, don't listen to the haters and trolls. This is Ripple's words. If they want to cancel me, they got to cancel Brad Garlinghouse because pre-allocation's confirmed by him. If they want to cancel me, they got to cancel Ripple because Ripple has confirmed they do the buyback and redirect those buybacks of XRP to on-demand liquidity. This is no longer theory, ladies and gentlemen. This is what they're doing. Not financial advice from me or anyone else, but I know what I'm doing. I'll catch all of you on the next one.